Welcome back to the Malaysia Money Matters Show. It's the 18th of December, 25. Okay, let's unpack this. We have a stack of huge deals today, particularly in construction and energy,
Yeah.
and some major policy moves that are going to impact commuters and, the outlook for the ringgit.
Indeed, we're seeing Malaysian companies reaching, record highs both locally and abroad. It reflects some really significant strategic moves. We should look at what this means for their growth and those critical government decisions affecting the average Malaysian next year.
Absolutely. Let's jump straight into the corporate heavy hitters, starting with Gamuda. They've secured another two massive contracts in Australia. We're talking over RM 8 billion.
An incredible number. And this hat trick of recent wins pushes their outstanding order book to a new record high of RM 46 billion.
46 billion, that's huge.
It is. The big one is the RM 7.32 billion Sydney Metro West Stations contract. Then there's another RM 718 million for civil works at a wind farm.
That's a great point. So staying with infrastructure, what about Sunway Construction Group, or Suncon? They landed a RM $570 million contract for a data center in Johor.
Yes, and this one is from a U.S.-based multinational tech corporation, which is key. With this new project, their total for the year is now RM 4.6 billion. It pushes their own order book up to RM 6.1 billion.
And it really shows Johor is becoming a major hub for this kind of thing.
Exactly. It's a high-tech build, too, core and shell works, very specialized.
Okay, so let's move from construction to commodities. United Malacca. They reported a record quarter. Net profit surged, 79% to RM 55.4 million for their second quarter?
Right, and the drivers here are interesting. It was primarily a 15% rise in fresh fruit bunch production, but also stronger prices. Crude palm oil was up 6%, and palm kernel was up a massive 35%.
So they're winning on both volume and price.
That's a sweet spot. And they declared a 7-cent interim dividend off the back of it.
And of course, you need energy for all this activity. Mohiba Engineering just secured a contract from Petronas Karagali.
Yeah, this one is worth up to RM 850 million. It's for minor engineering, procurement, and construction on wellhead platforms offshore of Terengganu.
So basically, essential maintenance work.
Pretty much. It's a steady earner expected to contribute positively right through to the first quarter of 2029.
Okay, let's switch over to the macro and political side of things. The government has decided to freeze toll hikes for 10 major highways in 2026. Good news for drivers.
Good news in the short term, yes. But it comes at a cost. The federal government is going to have to bear a compensation cost of RM 591.6 million to maintain those rates.
Wow. And the listed companies affected here are Binapuri, Tallyworks Corp, and Ecovest, right?
That's right. So something for investors to watch.
And staying on that theme, the fuel subsidy. Finance Minister Zizek can confirm there are no plans to replace the Buda 95 scheme with cash rebates to push people towards EVs.
Yes, and this clarifies the government's thinking. The main goal of Buda 95 remains a targeted subsidy. It's really to support groups who rely on, regular cars, like the over 106,000 eligible e-hailing drivers. It's not an EV incentive program.
Got it. Now, the ringgit, we've got a pretty bullish forecast from Australia and New Zealand Banking Group.
Very bullish. They expect the ringgit to strengthen even more, potentially hitting 4.00 against the U.S. dollar by the end of 2026.
4.0, what's supporting that?
Well, stable policy rates from the central bank and just resilient growth in the economy.
So let's jump to the international news because it's all connected. The global chip battle. Google is working on something called Torch TPU to make its AI chips compatible with PyTorch.
This is a huge deal. I mean, this is an aggressive move aimed directly at weakening NVIDIA's dominance.
Because everyone uses PyTorch, which is backed by Meta, but NVIDIA has its own CEDA software, right?
Exactly. So Google is trying to break that lock-in. They want to reduce the really high switching costs for developers who might want an alternative to NVIDIA's chips. It's a very strategic play.
And on that note, demand for chips is just, soaring. Micron Technology gave a surprisingly rosy sales forecast. They're looking at up to, $19.1 billion US dollars for the current quarter?
It's all about the AI boom. That surging demand means they can charge more for their memory chips. It signals real pricing power in the sector.
So wrapping this all up, what does it all mean? The local market seems focused on expanding overseas and doubling down on new tech infrastructure.
For sure.
While consumers here get the good news of a toll freeze.
And what's fascinating here is that consistent theme of infrastructure. It doesn't matter if it's Gamuda building Australian rail or Suncon building Johor data centers. It's all infrastructure, which raises an important question, I think. Will the government's commitment to absorb that compensation cost lead to future long-term restructuring talks? Like the concession extensions we've seen in the past?
Or are they just kicking the can down the road? A great final thought. Make sure you subscribe to the Malaysia Money Matters podcast so you never miss another deep dive. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.